We all have that moment where we daydream about what it would be like to be wealthy, to not have to worry about bills, to be able to travel the world, or simply to have the freedom to do what you love. What if I told you that the path to wealth isn't as mysterious as it seems? That it's not just about winning the lottery or inheriting a fortune, but about understanding and investing in assets that can grow your wealth over time. Welcome to our channel. Today, we're revealing the top 10 assets that can make you wealthy. So, whether you're a seasoned investor or just starting out, there's something in this video for you. Before we get started, if you're new here, make sure you subscribe and hit that bell icon so you don't miss out on our next videos. Real estate, the first asset on our list, has been a tried and true method of wealth creation for centuries. It involves purchasing physical property, such as houses, apartments, or commercial buildings, and using them to generate income. Now, there are several ways to make money from real estate. The first is through rental income. This is when you rent out your property to tenants who pay you rent. It's a great way to generate a steady stream of income. Just think about it. Having a tenant is like having someone else pay off your mortgage while you build equity in the property. Another way to create wealth through real estate is through appreciation. This is when the value of your property increases over time. While real estate markets can fluctuate, historically, property values tend to rise in the long run. So buying a property today could mean selling it for a significant profit in the future. And let me tell you, real estate also offers unique tax benefits. For example, you can deduct the cost of mortgage interest, property taxes, and maintenance expenses from your taxable income, reducing your overall tax burden. And what about leverage? Unlike other investments, you can buy real estate using a small amount of your own money and borrowing the rest. This allows you to control a large asset with a relatively small investment and multiply your returns as the property appreciates. Next up, we have stocks. Investing in the stock market allows you to own a piece of a company and share in their profits. It's like being a silent partner in a business, without all the day-to-day hassles of running it. There are two main ways to make money from stocks. The first is through capital gains. This is when you sell a stock for more than you bought it for. Let's say you bought a share of company X for $10, and a year later the stock price has risen to $15. If you sell your share, you've just made a $5 profit. That's a capital gain. The second way to make money from stocks is through dividends. Some companies distribute a portion of their earnings back to shareholders in the form of dividends. It's a way for companies to share the wealth, so to speak. If you own dividend-paying stocks, you'll receive a payout, typically on a quarterly basis. But keep in mind that stock market has its ups and downs, and the price of a stock can fluctuate based on a whole host of factors, from the company's financial health to general economic conditions. That's why it's important to do your research before you invest. Look at the company's financials, understand their business model, and consider their growth potential. And most importantly, it's always a good idea to diversify your portfolio. Don't put all your eggs in one basket. Warren Buffett, one of the world's richest individuals, amassed his wealth through savvy stock investments. Moving on, the third asset is bonds. It's a type of investment where you lend money to an entity, typically a corporation or government, in exchange for periodic interest payments and the return of the bond's face value when it matures. It's like an IOU, but on a much larger scale. There are several types of bonds like government bonds and corporate bonds. Government bonds are considered the safest since they're backed by the full faith and credit of the government. Corporate bonds tend to offer higher interest rates, but they also come with a higher risk of the company defaulting on its payments. One of the main advantages of bonds is their predictability. When you buy a bond, you know exactly how much you're going to get back and when you're going to get it. And this makes bonds a popular choice for conservative investors looking for stable, predictable income. Next up, we have mutual funds. They allow you to diversify your portfolio without the need to manage each investment individually, and that is its main advantage. Because a mutual fund invests in a wide array of assets, it helps spread the risk. So even if one investment performs poorly, others in the fund may perform well, balancing out the overall return. Another advantage is professional management. When you invest in a mutual fund, your money is managed by professional fund managers who have the expertise and resources to research and select investments. Mutual funds also offer liquidity. You can buy or sell your mutual fund shares on any business day. This makes them a flexible investment option, especially if you might need access to your money in the near future. Mutual funds can be a great way to start investing, especially if you're new to the game. They offer a simple, accessible way to diversify your portfolio and get a taste of the investing world. The fifth asset is investing in small businesses. It can be a rewarding venture, both financially and personally. When you invest in a small business, you're not just putting your money to work, you're also supporting the dreams and ambitions of the entrepreneurs behind it. And let me tell you, small businesses are the backbone of many economies. They create jobs, drive innovation, and contribute to the vibrancy and diversity of our communities. And as an investor, you get to be a part of that journey. You could become a silent partner, providing capital in exchange for a share of the profits. Or you could take a more active role, offering your expertise and guidance to help the business grow. The potential returns from investing in small businesses can be significant. If the business succeeds, you could reap the rewards through a steady stream of profits or a lucrative buyout. Just look at the early investors in companies like Apple or Amazon, who saw their initial investments multiply many times over. But yes, there is a risk of failure. Many small businesses fail within the first few years, and even successful businesses can face challenges from competition, market changes, or unforeseen circumstances. So it's recommended to do your homework, understand the business and the market, and be prepared for the ups and downs. Moving on, we have a famous one, cryptocurrency, the digital asset that's taking the world by storm. The most well-known cryptocurrency is Bitcoin, but there are thousands of others out there, each with its own unique features and uses. One of the main advantages of cryptocurrency is its potential for high returns. Because the value of cryptocurrencies can fluctuate rapidly, savvy investors can make a significant profit if they buy low and sell high. This digital asset is also incredibly versatile. It can be used for everything from buying goods and services to investing in new projects through initial coin offerings, ICOs. Some people even see cryptocurrency as a form of digital gold, a store of value that can be held for the long term. But keep in mind that the value of cryptocurrencies can be extremely volatile, with prices that can rise or fall dramatically in a short period of time. There's also the risk of loss or theft. Because cryptocurrencies are digital, they can be vulnerable to hackers. So if you're willing to take on some risk, cryptocurrency could be an exciting addition to your investment portfolio. The seventh asset is gold and precious metals like silver, platinum, and palladium. Today, they're prized not just for their aesthetic appeal, but also for their investment potential. The main advantage is their ability to hold value over time. Unlike paper currency or digital assets, gold is a tangible asset that has intrinsic value. It's not subject to inflation or the whims of government policy. That's why many investors turn to gold as a safe haven during times of economic uncertainty. This asset can also offer substantial returns. The price of gold, for example, has seen significant increases during certain periods, providing lucrative opportunities for investors. Investing in gold and precious metals can take many forms. You could buy physical gold, such as bars or coins, or you could invest in gold exchange-traded funds, ETFs, which track the price of gold. There are also gold mining stocks, which offer exposure to the gold industry. Next up, we have art and collectibles. They might not be the first things that come to mind when you think about investments, but they can actually be a valuable part of your wealth-building strategy. By investing in them, not only do you get to own and enjoy beautiful or interesting objects, but these items can also appreciate in value over time. Just think about a painting by a famous artist or a rare mint-condition comic book. These items can fetch a hefty price in the market. Many collectors derive a lot of satisfaction from hunting for rare items, researching their history, and preserving them for future generations. It's a hobby that can potentially pay off. And remember that values can fluctuate based on trends, condition, rarity, and many other factors. And unlike stocks or bonds, art and collectibles don't provide any income until they're sold. Art and collectibles, while not your traditional investment, can yield substantial returns. Just ask Yusaku Maezawa, the Japanese billionaire who purchased a Basquiat painting for a record $110.5 million. Moving on, the ninth asset is intellectual property. It refers to creations of the mind, such as inventions, literary and artistic works, designs and symbols, names and images used in commerce. When you create intellectual property, you have certain rights to that property, just like owning a physical asset. There are several types of intellectual property, including patents, copyrights, and trademarks. Patents protect inventions, copyrights protect literary and artistic works, and trademarks protect brands and logos. Once you've created and protected your intellectual property, you can license it to others and earn royalties. Every time someone buys your book, plays your song, or uses your patented technology, you get paid. Just look at J.K. Rowling, the author of the Harry Potter series. Her books and the movies, merchandise, and theme parks they inspired have made her one of the wealthiest authors in the world. Now, last but certainly not least, investing in yourself. It could be pursuing a formal education, whether that's a college degree, a master's program, or a PhD. Education can provide you with knowledge, skills, and credentials that can open doors to new opportunities and higher earning potential. You could take online courses, attend workshops, or read books on topics that interest you. The more you learn, the more valuable you become. Investing in yourself also means taking care of your health and well-being. After all, what good is wealth if you're not healthy enough to enjoy it? This could mean eating a balanced diet, exercising regularly, getting enough sleep, or even taking time to relax and do things you enjoy. Investing in yourself can yield different kinds of returns. It can lead to a higher income, a fulfilling career, better health, and overall life satisfaction. And unlike other investments, the returns you get from investing in yourself can't be taxed or taken away. Well, that's it for today. The top 10 assets that can make you wealthy. If you enjoyed the info in this video, we'd love to hear from you. Which of these assets are you most interested in? Do you have any personal experiences with these investments? Any tips or advice for fellow viewers? Drop your comments below. And before you go, don't forget to check out our video on the 18 lessons about money from the psychology of money. Make sure you hit that subscribe button and press the bell icon. Thanks for watching.